Hi, Mass Finance friends. We're super excited to bring you the first episode of Mass Finance in English. And thank you for your support in the past. And your continuous support means a lot to us. We'll be covering 3 topics today. So the first part is what does printing money mean for Central Bank of China and how it actually works. And the second part is to talk about the differences between China and the US when it comes to printing money. The third part is about the RMB exchange rate. RMB has depreciated to over 7.2 in the past few days. So would this depreciation be a new trend for RMB? And how far would this depreciation go? Well, all right, let's start with the first topic. We have mentioned from the previous episode that the cash reserve ratio from Chinese financial institution is already very low. So from 2018's 14.6% to 9.4% now. Reducing the cash reserve ratio means that the amount of money the commercial banks are required to be locked could be lower than what it was before. So this means the amount of money that can be used has increased at the same time, which also means it increased the ability to create money. The ability to create money is one of the most important factors to a country's economy. What is the ability of creating money? How was the RMB created? How could the money supply, which we call the M2, get to as high as 209.35 trillion? Let's take a look at this diagram. The title of it is called the money creation by the aggregated banking sector making additional loans. The upper portion of this diagram is a simple balance sheet of the central bank. The white column on the left is asset. In fact, it is also called the high-power money. The reason it is a high-powered money because the commercial banks use it to multiply the scale of their money supply. As you can see here, there are before loans are made and after loans are made. So whether it is before or after the loan, the central bank's balance sheet is unchanged. That means that the process of money creation has nothing to do with the central bank. The most important part we look at this is the bottom half of this diagram. When there are new loans at the commercial bank, their balance sheets has expanded. That is added loan in the assets section, and there is a deposit in the liability section. And that is the process of money creation of central banks. Isn't it just so amazing how money was just printed out of nowhere? And you know what? That is truly how money is printed in the modern credit and monetary system. Then you may ask, what does the capital reserve ratio have to do with it? So the purpose of the capital reserve ratio is to affect the ability of commercial banks to create money. And what does that mean? Well, take a look at this diagram again. The capital reserve ratio is actually a certain percentage of deposit that the central bank requires commercial banks to reserve in order to prevent any possible financial risk in the future. It's like the food that commercial banks prepare ahead of time for rainy days. Well, let's look at this picture. For example, my original deposit is $100,000 base money. After these $100,000 were placed in the first bank, the first bank can lend it out, but it can only lend out $90,000. So that the $10,000, what that 10% will be turned over to the central bank as a capital reserve. If company A got the $90,000 loan, and the company A deposit that $90,000 to the second bank, then the second bank will have to put that 10% of the deposit reserve, which is $90,000, to the central bank. The second bank then loans the remaining $81,000 to company B. And then company B deposits in the third bank. So same thing, the third bank will have to turn in the 10% of the capital reserve to the central bank. And it goes on. So that is what we call the credit derivative. I'm not going to go into the mathematics here, but the easiest way to understand this is that the $100,000 of the base money has been enlarged by 10 times, which now is $1 million. So the deposit reserve ratio is 10%. Eventually, your original deposit can be expanded 10 times from 100,000 to 1 million. So if the capital reserve ratio is 5%, then the $100,000 originally deposited will be expanded 20 times, which is 2 million. In China, the weighted average capital reserve ratio for large, medium, and small commercial banks is 9.4. That is 11% for large banks, 9% for mid-sized banks, and 6% for small banks. So the small banks have the lowest reserve ratio, and they are the most aggressive lenders out there, which means they will have the highest chance to face any financial risk. Well, let's review what we just talked about. We have talked about the process of money creation and the ability of money creation in the commercial banks. So in fact, what it really means when central bank says they're going to print money, it doesn't mean that the central bank will give money directly to residents, enterprises, or local governments. It means that the central bank will use commercial banks as a credit amplifiers and then deriving the money. It has a multiplier effect in the process of creating money. Well, next, let's talk about how United States prints its money. Well, before the 2008 financial crisis, American commercial banks were very active in lending. Well, people will get a loan regardless if you have bad credit or low income. So you could buy a house with a super low down payment and interest rate. Some speculative investor will buy 2 or 3 houses in that sense. The money creation ability of the US banking system has always been pretty strong, and the money multiplier, it has reached to 8, which is very high, even higher than China's now. After 2008 financial crisis, the United States has implemented several different regulations and stress tests in order to tighten their supervision on financial industry. And at that time, the commercial banks are also suffered a lot. And for example, the first capital evaluation plan is used to carry out stress tests to prevent bank liquidity risk. And the second example will be the Dodd-Frank Act stress test, also known as DFAST, for how to prevent systemic risk and providing security solution for some of the extreme risk that the large financial institutions such as banks may encounter. The third example will be the Comprehensive Capital Analysis and Review, also known as CCAR. It ensures that the large banks will have sufficient capital and liquidity under different economic and financial pressures. It also ensures their normal operation. So, long story short, as you can see here, that the entire supervision in the financial industry has become very strict, and the entire banking system has become very cautious after 2008. I've heard a recording before. It's from the former chair of Federal Reserve, Janet Yellen, at a Citibank leader meeting in March. She mentioned that she's not worried about the banking industry in the US, one of the most important reasons is that the capital adequacy ratio of the banking industry is relatively high with the implementation of strict supervision. So overall, it's not as fragile as people may think. After 2008, as I just said, that the US banking industry became extremely cautious, so that the expansion of the US money supply has been at a pretty low level. And the currency multiplier suddenly reached a low point from 8 to only somewhere between 2 or 3. So it makes there's no way to expect commercial banks to print money in the US. In that case, the Fed will have to do themselves by selling government bonds and selling asset-backed securities in order to increase the supply of its base money. Well, let's take a look at this chart. It shows the fact of the decline in the US currency multiplier. From the period of 2008 to 2014, the Fed's balance sheet has expanded by 400%, which means the base money has expanded 4 times. Well, however, the US money supply, which is the M2, only expanded by 56.6%. The numbers doesn't add up, right? Why? The core reason I've just mentioned is that the United States has tightened financial supervision. At the same time, commercial banks has become timid, scared, and cautious. So I hope by now you can tell the differences of how China and US print their money. That is, the China's currency multiplier is very high. I've mentioned in the past that it has reached to a historical high of 6.72. So it means the commercial banks has a pretty heavy burden and sufficient leverage. So once the economy has a recession, the risks of commercial banks are also relatively high. The economic contraction will also be more dramatic. So because of the multiplier effect and the leverage effect, if it shrinks, it will be very significant. And that is the first difference. So the second difference is that the Fed, because the Fed is the central bank of the global central bank, that the US dollar is the global reserve currency. So if there is a major expansion on the base currency happening worldwide, you would not have to worry about the devaluation of the US dollar. As you have seen that although the Fed just expanded $3 trillion in a short period of time, but the dollar has not depreciated much. So instead, there has been more noticeable currency devaluation among other countries. Actually, on China's central bank's balance sheet, 58% of its base currency has been endorsed by foreign exchange reserve. It's actually not so bad compared to some of the other countries where the economy is not as strong, especially if the assets behind the base currency it's not as high, like Cuba, Russia, or Mexico. There probably will be a sharp devaluation of base currency if you want to accomplish a large expansion. So there might be serious consequences in that monetary system. So to summarize what we just talked about, the differences between China and the US is mainly reflected in 2 points. The first point is that the RMB plays a different level of role compared to US dollars. The second point is the mechanism of printing money are totally different for both countries. In that case, the consequences are different. If both countries are printing money right now, the impact in the market will be a lot different. Well, the third topic, we're going to talk about the devaluation of the RMB. The devaluation of the RMB is subject to 4 factors. The first factor is amount of foreign exchange reserves. The second factor is amount of trade surplus. The third factor is amount of capital outflow. The fourth factor is level of intervention of the central bank, along with the foreign exchange control. We have seen the RMB exchange rate has started to depreciate, and most likely because there is some problems with the trade surplus. One reason is that the entire global economy has slowed dramatically after May. The trade surplus data report may be worse. And the second of the problem is the capital outflows. Because the economic expectations are very low at this point and lack of consumer confidence, the two combined reasons might affect the amount of foreign exchange reserve to decline. I don't know if you still remember when the RMB broke 7 last year. The spokesperson from the central bank has talked about some of the urgent matters. One of the things he said about the RMB exchange rate broke 7 is that 7 is not someone's age. So once you pass 7, you will never be 7 again. It's like the water level of a reservoir. So the water level goes up and down. And it all depends on whether we're in a dry season or wet season. It is obvious that after the second half of the year, will indeed reach a severe dry season. On the other hand, the trade surplus will be much less. Third part may be more serious capital outflow. Then we see that the foreign trade data in April was actually pretty good. That is because the previous result from the workforce and also what I have done in February and March. So after May, I believe that the trade surplus should shrink sharply, which means that the journey of devaluation of RMB has just begun. Plus our money supply M2. In April, the M2 has already reached 209 trillion. Any movement in regards to the M2 exchange reserve will easily increase the pressure of foreign exchange depreciation. So at some point in the second half of the year, I think there will probably be a tighter control on foreign exchange control. Finally, let's summarize for today's episode. I will share about 3 topics. So the first part, we talk about how Chinese commercial banks create currency. And the second part is about the differences between China and the US in terms of how they print money and create currency. The last part is to give you a preview on the trend of RMB in the second half of the year and the situation of capital organization and capital control. And that is all for today. Don't forget to like, share, and subscribe. See you next time.